Let me tell you about my friend Tony. He bought stock ticker symbol AMC. He thought it was a genius. Price spiked. He went to bed dreaming of Lamborghinis. Next morning, price tanked. And Tony, he didn't set any stop loss. And he lost all his money. Moral of the story, you don't lose money because stocks move. You lose because you didn't control how your trades get executed. The stock market is a device for transferring money from the impatient to the patient. Warren Buffett. Part 1. Order types are your defense and offense. Trading is a war. You wouldn't step on a battlefield without weapon or armor. Market orders, limit orders, stops, they're your tools to survive and win. Part 2. The big 4 order types. Number 1. Market order. Fast but dangerous. Instant execution at best price. But here's the gem. If the stock is thinly traded or during volatile hours, like right at market open, the spread widens and you can overpay about 2 to 5%. Quick tip, always double check the bid-ask spread before slapping a market order. Only used for highly liquid stocks and during normal hours. Number 2, limit order. A pro's favorite tool. You control the price, but it may never fill. Here's where pros use limit like a chess move. Buy limit, set below current price. Get the dip. Sell limit, set above current price. Exit at target profit. Quick tip, stack limit orders like a pyramid. Example, 20 shares buy limit at $98, 30 shares at $95, and 50 shares at $92. You scoop dips automatically while the herd panics. Number 3, stop loss order. Not just about losses. Everyone says stop loss equals avoid large losses. But here's the next level way to use them. Volatility stop. Instead of a fixed price stop, adjust it based on ATR or average true range. This avoids getting stopped out by normal noise. Quick tip, set stop loss just under key support levels or moving averages. Why? Because algos and big traders love hunting retail stop losses placed at obvious round numbers. Trailing stop, the silent wealth builder, locks profits while letting winners run. But most people mess this up. Set trailing stops based on percentage volatility, not flat dollar amounts. If a stock moves 5% swings daily, don't set a 2% trailing stop. You'll get kicked out fast. Once a stock passes key resistance and trends up, tighten trailing stop gradually to maximize gains. Part 3. Execution traps and hidden fees. After hour orders. Market and limit orders behave differently after hours. Low liquidity means big slippage risk. Partial fills. Limit orders may only fill partially. If you're trading big volume, check if your broker charges per trade or per share. You could be losing profits to sneaky fees. Stop loss gapping risk. If bad news hits overnight, stock opens way below your stop loss. And guess what? Your stop turns into a market order. You sell at the next available, possibly terrible price. What's the solution? Consider combining stop loss with options hedging. Covered later in the options episode. Part 4. The pros execution stack. Here is how pros stack orders. Step 1. Enter using limit orders. Never chase price. Step 2. Set a wide stop loss based on support or ATR. Step number 3, use trailing stop once position is up 10 to 15%. Step number 4, preset staggered sell limits at higher levels. This psychologically avoids greedy hold and crash mistakes.
All right, part 5. We're going to do a case study. I'm showing you a step-by-step how to buy a Tesla stock and set a basic stop to protect yourself and set up a trailing stop to ride profits. All right, step 1, we're gonna buy a share of Tesla first. This is Tesla. This is Schwab. This is my Schwab account. So we go to Tesla, ticker symbol TSLA. We go to buy. And as you can see, action, we're buying. Quantity, 1 share. Order type, we can either choose market or limit, but in this case, I'm going to choose limit at 245. And timing, day only, or you can choose good till canceled. We'll do day only right now. And then you click review. Make sure everything's correct. Buy, quantity 1, 245, day only, pay in cash, dividend. That's dividends. Let's not think about that right now. And then you place order. Step 2, set up a stop order or a basic stop loss. Now, I don't want to lose big if Tesla suddenly drops. So let's set up a stop order. This is Schwab's version of a basic stop loss. So we're back at Tesla. We're going to go sell because you're protecting your position by exiting if price falls. So quantity of share 1, action sell, order type stop. Stop price 225, let's say. So if Tesla price hits $225, Schwab triggers a market sell order. We're going to say good till canceled, and then click review, and then place order. So the moment Tesla hits $225, it sells at the next available price or the market price at that time. All right, step 3, we're going to do a trailing stop. So let's say we bought at 245, right? We bought at 245, and then we placed a stop order at 225, somewhere here. And then let's say Tesla stock skyrockets to 400. So you want to stay in while it's going up, but not give back all the profits. So that means we have to set a trailing stop. How to do that? We're going to go to sell, action, sell, quantity. We're going to protect our 1 share. And then trailing amount, we're going to order type, click trailing stop, trailing amount, let's do 10, and then percent. And then we're going to click good till canceled. So how it works. So Tesla climbs from $245 to $400. Trailing stop keeps moving up automatically, staying at 10% below the highest price. If Tesla dips 10% from peak, let's say the peak is $400 and it went down to $360, Schwab triggers a market sell at the next available price. This is a summary of everything we just talked about. So, simple rule, always know your exit before you enter. Use stop orders or stop loss to protect your downside, and use trailing stops to protect your upside. You don't control the market, but you control how you play the game. Order types are your chess moves. Use them like a grandmaster, or be someone else's checkmate. This is the secret sauce. For more finance, investing, real estate, and macroeconomics, let's all learn about it together. I'll see you in the next video.